only on Bloomberg Quint.
Thanks for joining us on lunch. This is Bloomberg Quint. I'm Harsha Subramaniam. The headlines at this hour. The government seeks to take over IL&FS by replacing all board members. The NCLT will pronounce its judgment at 2:30. Markets fall for the fourth straight session. Nifty trades below 10,880, dragged down by weakness in banking stocks. Bonds rally after the government decides to cut its borrowing in the second half of the current financial year. The Ministry of Corporate Affairs orders a probe into Vakrangi's operations over the last 3 years. Bandhan falls to a record low after RBI restricts it from opening new branches and fails to lower promoter holding to meet prescribed limits. The big one, the story unfolding before us at IL&FS. The government of India has moved the Mumbai NCLT to take control of IL&FS. The Ministry of Corporate Affairs has argued that the government be allowed to take control, a move that's similar to what was done with Satyam way back in 2009. Shivani Saxena is at the NCLT to give us a little more details of what the government is asking for. Shivani.
Thanks, Harsha. As you know, I'm at the NCLT right now. And so far, what the government has asked, they are moving under the Companies Act provision 241 to 42, which permits the government in special cases where public interest is in order to take over control of any company and to pass any relevant order that deems fit in respect of that company whose affairs are being mismanaged. So in this case, the government pleader has requested the NCLT to allow the government nominees, which are 10 nominees, to replace the existing board. So the present board of directors to be suspended and replaced with government nominees. They are also requesting for the directors to be empowered, the new directors or the nominee directors to be empowered with the powers to take over or replace the management of any subsidiary or associate company. So this forms a part of the IL&FS group. What they're requesting for is urgent replacement and urgent steps to be taken. They want directions by the end of the day, before sunset. Although an order is required to be reasoned with specific reasons as to why a particular order is being passed, they're requesting that the interim order be passed right now, and reasons can follow subsequently.
Okay, hold that thought, Shivani. Just very quickly though, from what we understand right now, the government has asked for suspension of the existing IL&FS board, bring in nominee directors. Any word on who will chair the board?
So they're asking for Uday Kotak to be the chairman and the non-executive director. The NCLT was cautious about taking names in public. They don't want these names to be out. They have taken a list off the record to consider even before the official order is out. So the only name that the government leader did come out with was Uday Kotak.
All right. Let's also get in Jayan Gupta, founder and managing director at Stakeholder Empowerment Services. Mr. Gupta, thank you so much for joining in today. This has unraveled quite quickly. A couple of weeks ago, we were dealing with a capital liquidity issue at IL&FS, and today the government has stepped in. What have you made of these developments at first?
See, first of all, as far as the whole ecosystem is concerned, it is a positive step, because any bad egg, if at all it is bad, should not be allowed to contaminate other good acts. So what was happening, there was some sort of a contagion effect of liquidity moving from IL&FS to the entire market. So at least that is a very positive thing, that it will be arrested and the contagion effect will not be there. That is hopefully so. The second is very simply that we really do not know what is the mess in IL&FS. As you rightly said, till a couple of weeks back or even 2 days back, it was only thought to be a problem of a liquidity mismatch, where current liabilities were far more than the current assets, and they were not able to pay. And people were blaming the circular of RBI of 12th February, because of which this immediate liquidity crisis came in. Now the new dimension has come in, that probably there are certain holes and fraud, and SFIU has also been requested to step in.
Yep.
So when such things happen, it is very important that those people who are behind all such things should step aside, and a new people should take over. Now, if you want to change the board, again, the shareholder meeting is concerned, but if entire board has to be changed, the shareholders cannot do unless until somebody steps in. So government is stepping in. Now, what is the name? Who is going to become chairman or not? We do not know. But as you say, that Uday Kotak is proposed to be the chairman. I think that is a very welcome development in the sense that Uday Kotak is a successful person in his own bank, and hopefully he will bring his capability to the board. But then the question is that management has to be changed, and as you rightly said, that the government has sought power, that the board will be empowered to change the management and board of the subsidiaries as well. So otherwise what will happen, you have a holding company where there are nothing, you are with chairman and board a change, but the operating company, there is no change, so it will not have been effective. So it is in the right direction.
So the comparisons...
More important in the entire episode is how all such things remain unnoticed at the regulatory level. IL&FS, as everybody says, is systemically important NBFC. Now, if this is the position in systemically important NBFC, there are thousands of other NBFC which may not be as big as IL&FS, but collectively they must be 10 times as big as IL&FS. So the issue is that are we sitting on a potential time bomb or not? To me, somewhere there is a disconnect between the changes that have happened in last 40, 60 years and the RBI regulation. It is high time that RBI constitute a committee to link into the entire gamut of regulation, whether it is the banking sector, whether it is for MDFC, because if you see, in last 1 year, how many times RBI has come into the picture? PNB, ICICI Bank, Axis, Yes Bank, Nirav Modi, and now IL&FS.
I take your point, sir.
Something is somewhere missing, and Bandhan Bank also.
I take your point entirely, Mr. Gupta. You know, the role of the board, role of auditors, role of shareholders, role of regulators, all are called to question in this story. But one very quick sort of comparison. You were around when the Satyam scandal unfolded before us, and that was an accounting fraud. It unfolded as an accounting scam. In this case, as far as we know, what is public knowledge, or at least information in the public domain, that this was a liquidity issue as far as IL&FS is concerned. What may have prompted, do you think, for the government, at least from what we heard the government, government lawyers say in NCLT today, is that asking for an SFIO probe, asking for the board to be suspended, asking for alleging mismanagement. What do you think sort of could have triggered this position of the government from last week, where it was trying to infuse liquidity, to today, where it's wanting to take over?
I'll tell you, your guess or your knowledge is as good or as bad as mine. We do not know. As I said, that till a couple of days back, it was only a liquidity crisis. Unless until we know detail, we do not know. But what it seems that there is some sort of a overvaluation of the underlying assets. Now, whether that overvaluation is genuine or it is because of some siphoning of the funds, we do not know. But one thing that has changed overnight is the political parties coming into the picture. If you recall, Mr. Rahul Gandhi made some statement yesterday or maybe day before yesterday. Now, in India, we have this is the biggest misfortune of our country, is this many times an issue which is entirely regulatory issue or financial issue or anything takes shape of political and socio-political issue. The moment it becomes socio-political issue, analysts like me or analysts like you or opinion maker like you and me loses their relevance, because then it is the political expediency which matters. So we do not know whether it is a result of Rahul Gandhi stepping into the picture or it is really the government has discovered something serious because of which we are going to SFIO way. We do not know, and we would never know till such time we have the report in our face.
Mr. Gupta, we leave it there. Thank you so much indeed for joining us with those details. That's a view from the former executive director of SEBI. A quick check on how the markets have been reacting. Banking stocks have been selling off. You did see the IL&FS group stocks, the ones that are listed at least, reacting quite sharply when the news of the government moving NCLT came in. Devina is here to tell us what's happening in the markets.
Harsha, so it's a very stock-specific market, and like you highlighted, it's the IL&FS group stocks that are actually doing really well, in fact, locked up in upper circuit. But I'll quickly run you through what the indices are doing and individual stocks as well. So for the Nifty, we're not doing much, just about 1/3% in terms of the cuts that have come in. Sensex is down about 1/10%. The banking index is under some amount of pressure, 0.5% given up. But the PSU banking sector, that's the one that's actually doing well for itself. It's the private banks that's seen a lot of pressure in today's session. So the PSU banking index is actually up in the green by about 1.5%. Yes Bank is something that you need to keep an eye out for. You did have the management joining in, Mr. Rajat Monga, talking about what's been happening. The stock is up of 3.2%. Didn't do much during the interaction as well. TCS, Infosys, so tech is leading the pack on the index. Some pain in the private sector banks, so the likes of Kotak Mahindra Bank. Also, as a repercussion of what's happening in Bandhan Bank, Kotak Bank is also witnessing some amount of pressure, about 5% lower. Axis Bank, IndusInd Bank are down in trade too. The IL&FS group stocks, so IL&FS Investment Managers, IL&FS Transport, IL&FS Engineering, these are all the stocks which are up on upper circuit. IL&FS is up about 20%, Transport is up 20%, Investment Managers is up about 10%. Two other stocks, Bandhan Bank, we saw the news about them not having permission to go ahead and increase the number of branches. The stock down on lower circuit, 20% given up. Some issues for J. Kumar Infra as well, that stock's down 20%. SEBI reinitiating a forensic audit for the company, 20% locked down on lower circuit. Some other names, Diwan Housing Finance for a change today is doing okay for itself, and pressure building up in stocks like IL&FS and Edelweiss.
Navina, thank you so much for that. That's the markets for you. She was talking about Bandhan Bank. The Reserve Bank has put Bandhan Bank's branch addition plans on hold. This is after the lender failed to meet licensing norms and bringing promoter holding down to 40% within the first 3 years of operations. Shraddha is here with more details. So have you heard from Bandhan so far?
They had a con call yesterday in which they've answered a couple of things. So I'm just going to start off with what exactly has happened. Two things. One, they have put restrictions on new branch opening for Bandhan Bank under the automatic route. And secondly, what they've done is they've frozen the remuneration to MD and CEO Chandrasekhar Ghosh at the current level till further notice. Why have they done that? The promoter, which is the non-operative financial holding company by the name of Bandhan Financial Holdings, that was required to bring down the stake to 40% within 3 years of starting its operation. So even after those 3 years, their stakeholding stands in excess of 80%. The argument from Bandhan Bank, at least on the con call, was that it is the SEBI mandated lock-in on the promoter sale post 1 year of the IPO was one of the reasons why they could not bring down their shareholding. They also clarified with respect to what the RBI strictures would do to their expansion plans and growth. They've said that the bank has 938 branches and they had a target of 1,000 by the end of the financial year. Since they're very close to the target, this will not really disrupt the normal business operations, and the current branch count, they've said that is adequate for growth at least over a 2-3 year period. Just in case I missed it, I want to mention the shareholding pattern. It's Bandhan Financial Holdings, which holds 82.8% stake in the bank as of 30th of June, and Public, which holds 17.7%. Harsha.
So what's Bandhan going to do?
There, in all likelihood, there are about 3 options that they have. One is that Bandhan Bank can go ahead and make an acquisition. Given the high capital adequacy ratio of 32.6% that they have, that capital is available for them to go and do so. The second option is that they could make some changes in the holding company structure or redefine the promoter entities. But this is something that the bank management had declined from commenting in the con calls, calling it the RBI's prerogative. The third option is that the non-operating financial holding company can pursue some non-banking businesses because the 3-year cap has been lifted, so they can go and pursue something in the financial services space itself. The question, of course, will remain the fact that they don't have past experience in any of these businesses, so we don't know how well that will be taken. But broadly, brokerages do see a negative impact, while the impact on the operating growth is not really seen to be large in the near term. It's the stake sale, overhang, which is going to impact not just Bandhan Bank but Kotak. So we've seen that in the case of both these stocks.
Shraddha, thank you for that. The Ministry of Corporate Affairs now wants to investigate Vakrangi's books of account. The ministry has sought financial statements for the last 3 years, according to an exchange filing made by the company. Darshan is here to take us through the scope of investigation and what's prompted MCA to step in.
Yeah, so basically, Harsha, if you look at what's happened over the weekend, what Vakrangi said that MCA wants to inspect its books, and they've given 4 to 5 accounts on which the MCA has spoken about doing it. The first is the fact that the sudden resignation by the auditors, Pricewaterhouse, that was the first scope of investigation. Then is the income tax assessment order. Tax audit for the past 5 years is something that they want to look at. The other aspects that this is the tax audit report. Other aspect is the Vakrangi Kendras, because there were a lot of concerns how many of them are real. They have almost 45,000 Kendras, and there is some bit of doubt about that. And deposit collected by franchisees because of the Vakrangi Kendras. So this is about it. And finally, the shareholding pattern relating to the open offer that Vakrangi has triggered, and they will have to give to minority shareholders. Now, if you're looking at it, the numbers for Vakrangi ever since all these issues started propping out have actually dropped. If you're looking at the revenues from 3,900 crores, 3,000 crores is moved to 6,500 crores, and in the first quarter they did just 1,000 crores. And when they were clocking in EBITDA margins of 26%, in the first quarter they clocked EBITDA margin of just 1%. So clearly financials have deteriorated for Vakrangi. Even if you're looking at the EPS from some 8 rupees, it's moved to just 12 paisa. So overall the financials are deteriorating for Vakrangi. Now let's take a look at the timeline and why this triggered. So basically the trouble for the Vakrangi when it was a 55,000 crore market cap started in January, when Mumbai Mirror reported exchanges are looking into stock price manipulation on the company. Then again in Jan, Vakrangi spent money to buy 20 lakh shares of PC Jewellers, and since that time both Vakrangi and PC Jewellers have corrected big time. Then Vakrangi clarified on the SEBI manipulation news in February, after a month after it was reported, because to do a little bit of cost cut, to remove the panic, they approved a capital allocation policy which says that 250 crores will be via a dividend and 1,000 crore buyback. And because of to clear the doubts in terms of Vakrangi Kendra, they have appointed Grant Thornton to actually carry on an audit of all the Vakrangi Kendras. Then the real trouble started in April when PwC abruptly resigned as Vakrangi's auditor. So that was when all the trouble started. They immediately announced new auditors that will come in, but trouble still remained. They made some changes in the capital allocation policy which the shareholders didn't like. They announced a large capex to use the cash on books to upgrade the ATMs at all the Kendras. So that was about it. And basically the next step that was that SEBI ordered Vakrangi promoters to make an open offer. That still didn't help the share price. And finally now the MCA inspection on the books, and Vakrangi from levels of almost 500 rupees is now trading at levels close to almost 25 to 30 rupees.
Darshan, thank you for that. After Friday's 70% crack, Infibeam Avenues has mentioned WhatsApp rumors as the reason behind the investor panic. Neeraj sat down with Vishal Mehta, the managing director of the company, who will continue to assert that the fundamentals of the company remain stronger than ever.
The fundamentals of the company are robust and very strong, and they're getting stronger by the day, and we're really clueless about how the market operates. But what we do know is that there have been some WhatsApp groups that have carried some erroneous messages, which may have created anxiety and panic among whoever has viewed it. So as a company, what we can do is we have been very proactive in terms of giving the statements and filing it out with the stock exchanges that all these rumors are baseless, and the company has complied with all regulatory aspects. What we do understand from market sources is that in the last few days, there have been many company stock prices that have gone through a fall and crashed due to some leverage positions of some market participants. So while I cannot comment and have specific information because we do not know the specifics of how the market operates, so what I can tell you is that the company is very strong in its fundamentals, and it's very robust, and it's even getting stronger by the day.
Have you in any ways been in touch with some of your large institutional investors? There were some arbitrage fund positions, of course, which would not be necessarily fundamental in nature, but a couple of other funds, and Access Equity Savers Fund has some large positions in your firm. A couple of global investors, including Nomura Singapore, have about a couple of percentage points out there too. What have they been saying? Are they still on board? Have they still stayed put, or have they sold off into this crash as well?
So, of course, we have been in touch with our investors, and we will, of course, continue to provide more and more and be very transparent in terms of information sharing. So, we've got a very mixed feeling here because on one side, our company's performance has been the strongest there is. And on the other side, we have a terrible day for our investors. We are also concerned about the specific rumors that are spreading through communication channels like WhatsApp, which have, of course, not even created a social problem in this country, which is, of course, being read in the newspaper, but now it's also creating economic problems. And we believe that, while we can continue to be proactive in terms of responding back to this, we also believe that it's important to actually go and figure out the opportunities to trace the origin of these messages through regulatory channels. And of course, it is not in our control. But the fact is that, there is not much that the company can do. Our focus as a company is to continuously focus on the fundamentals.
Okay, that's the management of Infibeam. Let's move on. It's not just the stock market that's taking on the chin today. Indian bonds, meanwhile, recovered with the 10-year benchmark yield falling below 8% mark. This after the government decided to cut or rather lower its borrowing in the second half of the current financial year. The RBI deciding to pump in about 36,000 crore through the open market this month. Rahul Satija of Bloomberg News is here to take us through some of those details about and if this has allayed some of those concerns in the bond markets. Rahul.
Yes, so this is a very clear indication by the central bank about on the bond market. What this does is that it gives a clear timeline for the bond market to know when the open market operations will take place. So the Gopal Krishnan, the head of Forex for South Asia at Standard Chartered Bank, says that yields could fall by more than 10-15 basis points over the course of this month. This is likely to boost liquidity ahead of the festive season and also help at the time of the cash crunch due to the banking problems that we are facing. Okay.
That's the action in the bond markets. Thanks, Rahul, for that. Canada, meanwhile, has agreed to join US and Mexico in the new NAFTA agreement, now called the USMCA, concluding 13 months of negotiations that had formed a wedge between the two countries. Bloomberg's Michelle Jembrisco reports.
What we saw was the clock was really just ticking from the end of August when President Trump had announced that he had a deal with Mexico and invited Canada to join the talks and adjust things as they saw fit. Of course, that was a hard-fought fight throughout the month. Over the weekend, we heard from our reporters on the U.S. side that they were really going at it in negotiations with Canada, both sides still kind of sticking to their hard lines. But in the end, they did seem to find a deal, and they actually credited, a lot of sources to our trade team credited Jared Kushner, senior White House advisor, as well as the U.S. Trade Representative Robert Lighthizer, with kind of keeping those talks going and finally pushing it over the line. There's a lot to be decided still. I mean, just in terms of getting this over the line in each of the domestic constituencies. As a former U.S. Congress reporter, I know this isn't the easy part either. What we do know is that the Mexican President Nieto is bound to leave office at end of November. So this really did kind of push the three parties also toward a deal and to some agreement here. In the process, at least on the U.S. side, moving forward, they're staring down, of course, midterm elections 5 weeks away. So, President Trump does face a little bit of a hurdle in the sense that the Democrats are poised to regain at least the House and could create a little bit further obstacles for him to get this over the line completely. But what we do know is the certainty is really helping in each of the three constituencies. Of course, we've been tracing throughout the morning how it's affected markets. Canadian dollar, Mexican peso strengthening. Of course, the S&P futures looking really good overnight. So it will be tough to kind of fight against this positive sentiment if they do want to kind of spoil the deal at this point. But we'll see how the deadline goes from here. It's going to take probably a while for those three to get it over the line finally.
Michelle Jembrisco reporting from Singapore. Out of time on this show. Thank you so much for joining us today.